All right. Guys, good morning, and you are welcome to our video on preparing a final account. So we've gone through some of the adjustments quite well. So now what we want to do is to learn how to prepare the final account itself. So we are looking at preparation of final account. Now, if you remember the components of financial statements, the components of financial statement, they are actually 5, right? So you know that one, there is the income statement. These are components. These are not elements. There are difference between the two. Okay. So we have the income statement. Number 2, we have statement of financial position, which we can also call balance sheet, right? So we can also call this balance sheet. Then 3, we also have the statement of cash flow. Four, we have statement of changes in owner's equity. Then 5, we have notes to the financial statement. Financial statement. These are the components. And it is learnt in the conceptual framework. But at your level, we are doing only this for now. When you get to level 300, you start doing the rest. All right. So we are learning how to prepare a financial statement. Now, so since we are going to look at the income statement and the balance sheet, let me remind you that in the elements, we use the income and the expense, though the incomes and the expenses to do the income statement. Then we use the asset is equal to capital or equity plus liability to do the balance sheet. So basically that is that. In the previous videos, I spent time on doing this one. Okay. And this, when I am teaching you how to prepare the financial statement, I will show you some of the things that will happen in adjusting the trial balance. All right. So this is what we're going to do. Straightforward. When you have been asked to prepare a financial statement, what the question will give you is that the question will straight give you a trial balance. Okay. The question will give you a trial balance. So you will be given a trial balance. So the information that you will need to prepare the financial statement will be given to you. And it will be given to you in two folds. Number one, you will have the trial balance. Don't forget, trial balance is something we have done from the beginning, where we did the journals, we posted them into the ledgers, and we used the ledgers to do the trial balance. So it's a process. And we said that the trial balance helps you to do the arithmetic, check the arithmetic accuracy of the entries that you have made, and aid the preparation of a financial statement. That's the function of a trial balance. Now, when you are given the trial balance, number 2, you'll be given additional information. Additional information. You'll be given additional information. All right. So, other people call it the notes. All right. It will be given to you. These are the two things that you use to prepare the income statement and the balance sheet. These are the two things. Now, the balance sheet follows this one. The trial balance, it follows this equation. So the trial balance tells you that if you remember, I told you A is equal to, so asset is equal to what? Equity plus liability. And I told you that you can never forget this because you should use the alphabetical ordering: A, B, C, D, E, F, G, H. You understand? So A, E, then L. And when it comes to this one too, when you are writing it, which one should come first? Is it not the E? So E, expenses, equates income. All right. So you see that if the expenses are more than the income, then you will get a loss. If the expenses are less than the income, or the income is more than the expenses, then you will get what? A profit. So that is how we do it. Now, I told you that all those ones here are debit balances. When we say something has a debit balance, so like the way you'll be doing control account, and at the end they will say the thing has a debit balance or a credit balance. So when we say these ones have debit balance, so it means that you should see their balance brought down at the debit side. And so in a trial balance, the figures you see are all balance brought down. Now, it tells you that if the balance brought down is at the debit side, then where would the balance carry down be? It tells you that the balance carry down is at where? The credit side. So that is how you need to understand it. All right. So it means the balance carry down of these things are at what? The credit side. That is the meaning. So take note of that. It anytime you say something has a debit balance, it means the balance brought down is at the debit side. That is it. Then these ones, so you see, this is on my left. So it will always be on your left. And these ones that are on my right hand side will have what? A credit balance. So that is that. Credit balance means what? A credit balance means that the balance brought down is at where? The credit side. And if a balance brought down is at the credit side, then it means the balance carried down was where? It was at the debit side. So this is what you need to understand. So if you prepare an account like this and you finish and the balance carried down is here, so you total, maybe there were some figures here, and at the end of the day, you did it like this, and the balance carried down is here. This account will have what we call a debit balance because the balance brought down will come here. Have you seen that? That is it. So if in case you have a question, then the thing is an asset. You know, for all assets, the balance brought down should be where? Debit, right? But in the question, you realize that the balance brought down is at the credit. Then it means that the thing has changed its status to become one of these things. That is the meaning. For example, if you have bank balance, where should bank balance be? Bank is part of which element? Which element in these five? We all know bank is what? An asset. Is that not it? But if the bank happens to be, so which means that the balance brought down should be at the debit side. But if the bank has happened to be at the credit side, then it means that it has changed to become what? A liability, meaning that the bank is an overdraft. We have rather borrowed money from the bank. It's an overdraft. So you need to understand the dynamics about that. Now, in the trial balance, we use the balance brought downs or the balance carry downs to prepare the trial balance. So let me show you a sample of a trial balance. So you see, we've been using this in our tutorial face-to-face on campus. We've been using this information trying to drag it down. Good. We have been using this information on campus. All right. So for tutorials. Now, you realize that this is the trial balance. And you can see the things here. If you take capital, where should it normally be? Do you remember the accounting equation? Check it. Remember, another name for capital is equity, right? So when it is for a sole trader, we normally use the word capital. But when it is for a company, we use equity. So take note of that. So where do you see it? Isn't it at the credit side? Drawings is at the debit side, meaning that the drawings is against the capital, or it is an expenditure, like something that you are going to reduce your profit with. All right. So that is that. If you look at trade payables, credit side, long-term loan, credit side. So bank, this is bank, and bank is here. So that tells you that it is. So all the things you see at the debit side, they are either assets or they are what? Expenses. Have you seen that? That is what it is. They are either assets or expenses. All the things you see here at the debit side. Then all the things you see at the credit side can be any of these three. It can be equity, it can be liability, it can be an income. So that is where they are also at. So you see those things at the credit side. So that is the trial balance information. Now, there are two things that I'm going to say about the trial balance. You need to write it down. In the trial balance, all the income that you see, all incomes, you should know incomes by now from the very first lecture, what incomes are. So incomes, we said from the very first lecture, includes your revenue, right? And what we call sales. Is that not it? Income includes gains. When you sell something, the profit you make on selling the things that you don't normally sell. All these I explained in the first video. So take your time and watch it. All right. Then returns. Returns, like investment returns that you will be the one collecting. It is income, something that is coming to you, not something that is going out of you. It is something that is what? Coming to you. So revenue comes to us. We sell money, the money comes to us. When you gain, you sell something, the profit on disposal, this is what we call it. We call it gain, profit on disposal. You see, I didn't say profit of really a sale. It is a disposal, meaning that we are selling something we don't normally sell. All right. If I sell my laptop now, I don't trade in laptop. It's not like I am always selling laptops, but it is just my one old laptop that I'm selling. So that means it is a disposal. But if I am somebody who sells laptops, that one will be a revenue. That is the meaning. All right. So if I have some returns from investment, some rent income, these are all incomes. So in the trial balance, we are saying that all the incomes that you see in the trial balance, and you have listed the incomes for you. So example include your sales revenue, sales or revenue. All right. And where are the positions of these things? You see that they are at the credit side. We talked about gain on disposal, gain or profit on disposal. All right. We talk about investment income or return, investment income or investment return. rent income, dividend received. So dividend that you receive, commission that you receive, check them. All right, check them. So all these incomes that you will be received, something received, whatever received, subscription received, whatever you receive, okay? Some subscription that you receive, you will see much of that in next semester, non-profit making organization, but the video is already available. So all these incomes that you see in the trial balance, they have already been what? Received. All right? They have already been received. They are not yet to be received. They are not about to be received, but they have already been what? Received. Take note of that. Then all expenses, as for the expenses, I can't list them. They are many. All expenses. You can name any expense, rent expense, subscription paid, internet subscription, what wages and salaries, carriage outwards, everything. All right. Purchases, they are all forms of expense. Some are direct, some are indirect. All forms of expenses are also being paid. So let's write some examples so that some people will know that these are all expenses. Rent and rate, television expense. Hey, remember what we used to pronounce in class? Utility, but we were joking with it as utility, but it's actually utility. So they are all part utilities. All right. Wages and salaries. They are many. I can't list them all. All right. Wages and salaries, even depreciations, which you don't normally find in the trial balance. All right. But if you find depreciations in the trial balance, depreciations are not expenses we pay. Okay, they are notional expenses. You don't pay it to anybody. Now, these ones are already been paid. They are already paid. So the ones that you see, the income to, they have already been what? Received. They are already received. That is what you need to understand. That is what you need to understand. The last thing that I will tell you about the trial balance is that when you are preparing a financial statement, all the items in the trial balance are treated once. Once. All items, whether expenses, whether income, whatever, all items in the trial balance are treated once. And please, that is that. You see, I've already told you in class that accounting is not difficult. All you need to do is to obey the instruction. All right. They are treated what? Once. Take note of that. Now, when I say they are treated once, what does it mean? It means that the thing will appear only one time, or you recognize it only one time in the income statement, or in the statement of financial position. So that thing cannot be in the income statement and at the same time in the statement of financial position. If you do that, then it means that you have done it how many times? Twice. So that is that. So take note of these instructions when it comes to the trial balance. So for example, if I am preparing my income statement, something like the sales will only come into the income statement. Something like the sales. I will only record it in my income statement as sales. That's all. That's all. Now, so that is the thing about the trial balance. So something like this, it will only come once. Where? In the income statement. I'll show you the format. All right. So you treat them once. So that is it about the trial balance. Then we come to the additional information, because those are the two things we need to prepare the financial statement. So we come to the additional information. How do we handle additional information? Additional information or the notes. What do we do with the additional information and the notes? So, or notes. What do we do with them? For example, this is what we call additional information. Have you seen this? The following information is also relevant. So it is up to here. There are 7. So how do we deal with these ones? How we deal with these ones is that they are additional information, and that tells you that the double entry for those information have not been done. That is the meaning. So additional information means that the double entry has not been done. You remember the double entry? The double entry that says that to every debit, there is a corresponding what? Credit. So it means that you are now going to do the debit. What will you debit and what will you credit? We will learn about that. So that tells you that the additional information, another name for it is also called a note or footnote. All right, or footnote. Additional information or footnote or the note, that means that they are treated how many times? Twice. So treat them twice. Treat them twice means pass the double entry. It means debit something and credit something. That is what we mean. That is it. So taking you back. So these are the things you need on the preparation of the financial statement, the income statement and the balance sheet. So now, if you pick the assets, which we have done a lot on that, how many assets do we have? Types of assets do we have? You remember we had what? The non-current assets. The non-current assets. And we have what? The current asset. You remember, right? Good. Now, the non-current asset, I also explained to you that we have tangible non-current assets, right? Tangible NCA and what? Intangible NCA. Listen, you can't skip a video and think you understand accounting. You have to follow it systematically. Accounting is not for lazy people. Remember that. I always tell you in class. So the best parents we can ever have is accounting. These are parliamentarians that were doing all those things, you will never see any of them who was an accountant. It is not possible. It is not possible. So accountants behave because if you don't follow systematic instruction, you can never be an accountant. So you won't find accountants doing certain things. Of course, to every law, there is exception. So you'll be finding one or two be in there. But generally, accountants are organized people. All right. So if you want to get it, start the video and get the basic understanding. All right. So now, when we take our tangible assets and there has been something said about them in the footnote. Most of the time, you will see depreciation about them in the footnote. And we have learned depreciation about the tangible assets. So if you look at this one, you will find that they will tell you something about depreciation. Have you seen this? Land and building on straight line, equipment and furniture reducing balance. Have you seen that? So what will you do? You will calculate the depreciation, and we've learned how to calculate the depreciation. So when you calculate the depreciation, you calculate the depreciation, and we've already learned how to calculate the depreciations. So you can do that. Calculate the depreciation. When you calculate the depreciation, it is at where? A footnote. So we have to treat it what? Twice. That is it. How do we treat it twice? When you finish calculating it, that depreciation will be an expense. So you treat it as what? As an expense. Where is expense? Expense, so you saw this. Where is the expense? We told you that we use the income statement to do it. So where is the expense? The expense is in the income statement. So inside the income statement, you will go and treat the depreciation as an expense. So the depreciation you calculated, you put it there, 100, 200, whatever it is. Then again, so doing this is called a debit in the income statement. So you are debiting your income statement. You are debiting the income statement. Now, not only that, because it is in the footnote and it has to be treated twice, what will you do? You will add that depreciation that you calculated. So add it to the accumulated depreciation. Accumulated depreciation. And where is the accumulated depreciation? The accumulated depreciation is inside, or the provision for depreciation. It can be, it's the same thing, all right? If you don't see accumulated depreciation, you might see provision for depreciation. Where? In the balance sheet or the statement of financial position, all right? Balance sheet or statement of position. So when you do this, you have done the double treatment. So in the statement of financial position, you see cost, accumulated depreciation, then net book value. You will see it. So you will write the cost. So in the trial balance, you will be given the cost. So you will see it, the cost of the asset. In this asset, it is land and building. Have you seen that? Land and building. Where is it? Where are you? Where are you? Where are you? Where are you? This land and building. How much is that? 1,002. So you write 1,002. Then what is accumulated depreciation or accumulated provision for depreciation or provision for depreciation? What is that? The word is accumulated. Accumulated means add, 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 add. So it means that you go to the trial balance. When you go to the trial balance, you already see a provision for depreciation or accumulated depreciation. You will see it. For the building, it is what? 90. Ask yourself, why are they saying only building, not the land? Because we don't depreciate land. So this is 90. So the 90 that I see here, you see, it's a credit. I'm going to have the 90, then I will add the depreciation that I calculated, the one I'm making it a double treatment. I will add that. Now, how much is that? Of course, if you check the question, they said that depreciation is land is 10% on straight line, and you know how to do straight line, 10% on cost, and the cost is 120. So 10% cost is 1,000 to 10% on 1,002 will be 120. So this is it. So together, my accumulated depreciation. So it means that in my depreciation expenses in the P&L, I'll write expenses 120, depreciation expense 120. Then I'll come and add that 120 to the one I already have, and that makes it what? 210. Is that not it? Good. Good news is that you don't really need to do 90 plus 120 and write the 210. You can just punch it on your calculator and write 210 straight. All right, that is that. So what is the net book value? We have learned net book value. It is the cost minus accumulated depreciation. So 1,002 minus 210 is 990. This is how we do it. So you have satisfied the double entry. So that is that. You saw that this one is a credit in the accumulated depreciation. So that is what we do. So all the additional information, you will do it like that, one by one, one by one, one by one. That is how we do it. All right. So just before I wrap up, so you've seen how we do the depreciation. So you can actually take your time and do the one for equipment and furniture. You can do it. Do the 10% on reducing balance. And please, in the trial balance, when you are asked to do a reducing balance, you do not remember how we do reducing balance? Cost minus what? Accumulated depreciation. So reducing balance is a percentage multiplied by the net book value. And how do we find net book value? Find cost minus accumulated. So cost minus provision for depreciation. Please, the provision for depreciation is the same as accumulated depreciation. So if we can interchange the two. So you less it. Then you get what we call the net book value. Then you apply your percentage. So now, we have not calculated the depreciation for the furniture and equipment. What is the furniture and equipment cost? We are here to do the depreciation. So the cost for furniture and equipment is 800. So you see the cost is 800. But how do I find my accumulated depreciation? I need to do my depreciation and add it to the provision for depreciation before I can. Because already in the provision for depreciation for equipment and furniture, it is 240. So already it is 240. Plus the one that I'm going to get. But the one that I'm going to get is cost minus what? Accumulated depreciation or provision for depreciation. So you will see that the cost is 800. Then the provision for depreciation or the accumulated depreciation is in a trial balance. You saw it. It is what? 240. Good. So you will use minus 240. Then you get your net book value. So we have 800 minus what? 240. That gives me 560. Then I calculate my 10% on it. So 10% on 560 is how much? 56. Have you seen that? So I will add my 56 to it. Here will become 296. It's as simple as that. It's as simple as that. So now I can now get the accumulated depreciation. So we have 800 minus net book value, minus 296 gives me 504. So this is what you saw in, so we have 941494. This is what you saw in class. So that is how you do the double entry. So we have seen how we do the double entry for the depreciation, right? And that is because that is the only thing that will be affecting your tangible non-current asset. Then when you come to current assets, so today I'm just doing the asset part, all right? So take note of that. When you come to the current asset, what are the things you see in the current asset? And please let me hereby add that you may have something of investment, okay, short-term investment as part of your non-current asset. But that one, we don't depreciate it. So if you have something like that, so you see this, let me take this one off. So 1494. 1494. So these were land and building. So you write equipment and furniture, right? If you have long-term investment or any investment, if it is long-term, it will be here. So if the amount is, say, do we have such in the question? Any investment in the question? Did they do any investment? 1, 2, 3, 4. So investment, this is it. Investment in government bond. How much is that? 500. So you just come and write 500. That's all. That's all. So here you total this to be 2,000. Underline it. And like I've said, you don't need to do this part. You just have to punch it on your calculator and write it there. All right. If you do it, fine, but just punch it on the calculator. You can write it. All right. So that is that. So that is your non-current asset part. These are the things you will have. When you come to your non-current asset, in the balance sheet, you have inventory or stock. So the stock, the one that will come here, is your closing stock. Closing stock. Then you have what? Trade receivables. And all these things, there are adjustments on it. So I'm going to take you through one by one. Today, I've shown you how you do the adjustments in preparing the, what do we call it? The tangible non-current asset. The next video, we will learn how to deal with all the adjustment on the trade, the current asset. So learn. I'm showing you the current assets you can have. So we have of that. Let me write it fully. Trade receivables. The adjustment that can affect closing stock is that somebody returns the goods, some of the goods. But that one, you see that we will do it in the P&L. So we will not, most of the time at your level, this figure will be constant. You will pick it. Now, it will be given in the footnote for it to come to the balance sheet. So you will see here something like the inventory were valued at this, the closing inventory at the close of the business. So you have it, 510. It's simple, straight. Then the adjustment that will affect receivable are bad debt. That means those ones that will be in the footnote, not in the trial balance. Provision for doubtful debt. Then return inwards if there is return. But this return should be found in the footnote, not in the return. So if there is return inwards in the footnote, not in the trial balance. Because the trial balance one, we treat it once. That is all. If it is in the footnote or the additional information, it is an adjustment that we can do there. So these are the 3 adjustments we will learn. And that is what we will learn in the next video. After that, there is expenses prepayment. If there is any expense that has been prepaid, I'll show you how you go about it in the footnote. Remember, everything is about the footnote. Then we have income accrued. And I will explain that one to you. After these 4, so we have 1, 2, 3, and 4. After these 4, you have your bank, then you have your cash. So that is that. Basically, that is that. In your bank and your cash, the adjustment that can happen to this one is that the person withdrew cash for personal use. So drawings of cash or bank, money from bank for personal use. So drawings from bank for personal use. Please, anytime you see in the question somebody has done something for personal use, it is called drawings. Take note of that. Then the cash too. So the bank, this is what can happen. The person can also do drawings on cash. Here, that is what you treat it. But the person too can introduce additional capital into the bank account. So we will learn what to do when there is additional capital, or when you see in the footnote that there is introduction of additional capital in the form of check or bank, introduction of additional capital in the form of cash. That is in the form of cash. So these are the things that we will be doing. As for these ones, they are the most easiest ones, and I will take my time to show you. These are the little tricky ones. So watch out in part 2 as we deal with the things that affect all these things, so that we will be able to prepare the correct balance sheet. See you in part 2. Then in part 2, we will try and solve this question. All right. So see you in part 2, and have a great day. Bye-bye. Anyway, before I go, don't forget to subscribe to the channel. Bye-bye.